most sincerely welcome you to today's episode of Tax Matters. My name is AMYMAT. The month of October is also gradually coming to a close, and that means that we have just about 2 months to the end of 2015. So how has business been? How are you faring? We do trust in the Lord that before the end of the year, we will smile, and that by special grace, 2016 will be great. That the economy is currently in a lull is not a secret. Nobody can hide it. For 2 consecutive quarters now, GDP growth has slided. In the first quarter, it was 3.9, and in the second quarter of 2015, it was 2.35. This is against an average GDP growth rate of 7% in the year 2014. And of course, the target of the Muhammadu Buhari administration of 10% GDP growth rate. So what do? That is the question. How do we get out of the woods? Of course, this program is Tax Matters, and so today we'll be looking at tax-related ways of tackling the problem at hand. We'll go in the direction of the CITN, the Chartered Institute of Taxation of Nigeria, which paid a courtesy call on the acting executive chairman of the FIRS just on Wednesday, the 14th of October. At that meeting, they proffered solutions to the problem at hand. The second event will be the screening of ministerial nominees of the president. That began on Tuesday, the 13th, at the upper chamber at the Senate. And some of those nominees, in providing answers to the questions put to them, also put forward some suggestions. The program is Tax Matters, and my name is AMYMAT. Welcome once again. The program is Tax Matters. On Wednesday, the 14th of October 2015, the Chartered Institute of Taxation of Nigeria, CITN, paid a courtesy call on the acting executive chairman of the Federal Inland Revenue Service, Mr. Babatunde Fowler. The high-powered CITN delegation, comprising the president and chairman in council, past presidents and council members of the institute, as well as those of the West African Union of Tax Institutes, WAUTI, essentially came to appraise the acting executive chairman of the FIRS of developments regarding, among other things, the proposed Charter of Tax Demands for the President Muhammadu Buhari administration, amendment to the Self-Acceptance Regulations 2011, and the institute's stand on the proposed use of tax consultants for tax audits. On the proposed Charter of Tax Demands, President of the CITN, Dr. Mrs. Teju Shomoni, had this to say.
Is that we have a proposed Charter of Tax Demands which we intend to send to Mr. President. We want Mr. President to give consideration to tax laws and the challenges they pose for tax administration. We would like the President to create an office of special advisor to Mr. President on taxation. Likewise, creation of National Assembly Committee on Tax Matters. Also, to consider to award national honors to deserving taxmen, and also to continue to implement the national tax policy.
The CITN also had something to say on what it termed contentious provisions in the Companies Income Tax Act.
The CITN have also noted that there are some contentious provisions in CITA. So we looked at some of the contentious provisions in that law, and we want to bring some of them to your attention that may require some amendment when the time is appropriate.
These provisions include, amongst others, the discretion of the FIRS in determining the amount allowable for tax purposes in respect of expenses incurred outside Nigeria for and on behalf of companies, rules for commencement and cessation of business, imposition of minimum tax, and acceptance certificates for capital allowances. There were also suggestions with regard to amendments to the Self-Assessment Regulations of 2011. On the use of tax consultants for tax audits.
Likewise, we have already done a position paper on use of tax consultants for tax audits. So our position is that we have aligned with that, with your position on the use of tax consultants, but we want to request that tax audit FRS will engage the audit firms that are also licensed tax practitioners. We are not talking about general audits, we are referring to tax audit.
In his response, Acting Executive Chairman of the FRS, Mr. Batunde Fowler, expressed appreciation for the visit and also seized the opportunity to place taxation and indeed revenue generation alternative to oil on the front burner.
We have accepted as a nation that even if oil produces revenue, it's the icing on the cake. And Nigeria as a country has shifted its focus on oil revenue to taxation. So I think that this is a very good time for you to have paid a courtesy call. And at the same time, we'll also be asking CITN to partner with us. Now, in terms of the national honors, this issue had been brought up some time ago, and it seemed like the nation did not appreciate tax practitioners. But I think it's an area where we believe that we should nominate people who have given their all in the area of revenue generation through taxation. So I think it's something that we have to look inward. In terms of the amendments of some of our laws, we'll certainly look into each of them. And at the same time, we would also like CITN, where possible, to write on behalf of CITN. As being an interested party in the changing of laws as FIRS, sometimes when these are sent to the House or to the National Assembly, sometimes they like an outside opinion of things, of the way things should be.
If anything comes from oil, we will consider it as an icing on the cake. Food for thought. Very well said.
Every day, my people they for work. Some they do office work. Some get it them own business. So all of them want good road, constant power for better life. Whether now office work, oh yeah, pay your tax. Whether now your own business, oh pay your tax. If you want a better life, oh pay your tax. Now your civic responsibility, pay your tax. Better soup, now money cook oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right. Good roads, good hospitals, portable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
Welcome back. The program is State Tax Matters, and we are looking at solutions to the problem at hand, the lull in the economy of Nigeria. And we want to go to the National Assembly. Beginning from Tuesday, the 13th of October, 2015, the upper chamber of the National Assembly, the Senate, began screening ministerial nominees of President Muhammadu Buhari. The screening exercise was as interesting as it was revealing that indeed Nigeria is blessed. We want to share with you some of the high points of the screening exercise, the answers provided by some of the nominees to the questions posed to them, questions on the state of the economy, especially with relation to taxes, taxation, internally generated revenue, legislating for taxes, etc.
So I have two questions for you, which I believe we'll be able to deal with. The first is the issue of VAT administration. VAT. Possibly Nigeria has the lowest VAT in the sub-region. As governor of Lagos State, and with the dwindling economic situation in the country, what will be your advice in terms of the level of VAT that should be VAT, value added tax, that should be charged by the government of Nigeria, and how do you think that that VAT should be appropriately be distributed in view of the provisions of the Constitution?
As far as value-added taxes are concerned, they are what they are taxes for adding value. And so they have first taxes that generally seek to stimulate production, improve economic activity, and so on and so forth. So those who benefit from it must essentially contribute to it. Secondly, because it is a form of consumption tax, we must also understand that there are limitations to how its application should be. And generally, food items, baby things, and all of those things are excluded from it. And in the main, many economies have used it to, as it were, redistribute incomes and reduce inequality by taking more from those who consume high-end products, luxury products. So, specifically to the question, I don't have scientific basis to say today that there is an argument for increasing the value-added tax. And I think before we decide to increase taxes, we must first optimize the capacity to collect what is in place. One of the things we did in Lagos was to increase the number of people who were contributing to the Commonwealth instead of seeking to increase the number of taxes that we levied. And so, between 2007 and 2015, the number of people who were paying taxes grew from 500,000, who were bearing the burden of the whole state, to 5 million. But our numbers show, in the population of about 21 million, that there were 9 million plus or minus people earning income in the state. So there's still scope for collection of taxes from close to at least 4 more million people. In that sense, the burden of managing the state becomes lighter when the responsibility is shared and spread. So I think first, before we decide whether we are taking up the VAT or we are reducing it, is to look at where we are today and what mechanisms we can use to stimulate collection. Today, online technology is a very versatile tool for tax remittance, for payment and settlement of bills. How we migrate to those platforms very quickly for government work and all of those will probably help in that sense. Because one of the disincentives that we saw initially, successful as it was, asking people to a bank to pay because we wanted to reduce interference of public servants with cash, helped. But after a time, it became cumbersome, and we had to look for new ways in which to encourage them to make payment cost-effective and also comfortable. As far as distribution is concerned, I think one of the ways in which we can stimulate the economy of this country, at this moment when there is a need in any event to diversify away from oil, is to encourage productivity and to allow the states who generate the most in terms of these taxes to keep as much of them. Competition has always been known to stimulate productivity. And as much as I can say that I haven't probably traveled all of the 36 states of Nigeria, the knowledge and information available suggests to me very clearly that there is no state in this country that is unable to undertake some form of productive activity, whether it is from milling rice in the most rural areas, whether it is processing cocoa, whether it is timber processing. So those kind of multiplier activities support the growth of industries and are capable of happening across the nation. Yes, some states may be disadvantaged in terms of their level of development, but until we are in a position to say, let us make tough choices, let us encourage this to happen because of tomorrow, rather than seeing today, the incentive to produce will not be there.
There's this issue of PIB, Petroleum Industry Bill, which has been lingering from the 6th Senate to the 7th Senate. And I happen to be a member of one of the committees responsible for that PIB. And there's this story making the round that there are so many versions of PIBs between the National Assembly and the Executive. The question is, would you now produce your own version, your own revised draft PIB for submission to National Assembly, or are you going to rely on what's already been submitted by your predecessor?
I think first of all, let me say that one of the things I've said to myself since resuming as GMD of NNPC is that I will not be constrained by the lack of PIB in making sure that holistic solutions to the industry continue to be propelled. So using existing laws, we'll continue to make changes. We'll continue to draft solutions. We'll continue to tinker on. Because at the end of the day, whether or not PIB is available and passed really doesn't lie within the umbrella of the executive. It lies with this revered assembly. But I also do not think that the problem really with PIB has been the fact of the versions. I think by the time the last Sixth Senate was rounding up its program, you had gotten a version that was clearly the version that both houses were looking at. Am I going to create a new version? Not really. I think what I will need to do is take the version that you have, look at it again, make changes. The key issues is that as long as we continue to want to pass a holistic PIB, it's going to be a very major challenge. But once you begin to break it up into critical aspects, you begin to make a faster run to passing PIB. Fiscal regimes, for example, you've got to ask yourself, why would you want to have fiscal regime, for example, inside the PIB? Because to change those fiscal regimes, which are a very dynamic environment, you have to come back to this assembly to also make changes. You must find a way of pulling out fiscal environment, fiscal regimes, and leave them to existing tax laws which you can amend, and additionally look at the PSCs and the joint venture agreements and the tax laws to enable you to determine fiscal regime. The advantage in that is that you have the flexibility of changing with the times. At the times when oil prices are so low that nobody is willing to invest in your country, you may give some incentives. At the time when they're so high that people are making outrageous profit result, you may increase your taxes. But so long as you leave it in a holistic, blue-barreled type voluminous PIB, you are stuck in terms of how you're going to get the required votes each time to make amendments or tax. So I think the way to go is, first of all, take what is there. I don't believe in throwing away the baby with the bathwater. Take what is there, look at it in the context of where we are today. The oil price has slided since the time, but if you count the time that the first versions of PIB went in and now, oil prices have moved from 70 to 90 to 120 and then back out to 45 and 50. Environments have changed, the considerations have changed. But the aspects of PIB that deal with organization, structure, administration, reorganization of the government agencies that are going to be responsible, for stewarding the oil industry are still as relevant as they were before. We can take those, the interests of communities are still as relevant as they were before. So we can take those, pass them fairly quickly so that we can have some level of certainty. I can tell you that the average sorts of volumes in investment that we're losing on an annual basis because of the lack of PIB is in excess of $15 billion a year. And the reason is simple. It would have been better that you didn't start at all than announce very flamboyantly that you were going to do PIB and then step back from it. Because it creates a level of uncertainty that no international investor wants to grapple with.
Last but not the least, this gem of a woman, this worthy representative of the women folk.
Your attainment in Ogun State focused on IGR. How do you think effective strategy for IGR collection can be deployed in your new assignment?
At the end of the meeting of the Monetary Policy Committee of the CBN governor came out to say that we were heading for an economic recession in 2016. Now, he said unless some proactive steps are taken, we will be there. So in your view, what do you suggest are those proactive steps? Secondly, what are those symptoms that you consider us getting to this recession?
Thank you very much, distinguished Senator. Senator Wamako's question about IGR and the role of IGR at the federal level. As we all know, the oil price has fallen. In fact, yesterday it closed below $50. Now, oil represents just 9% of our GDP, but it represents 75% of government revenue.
So what that's telling us is that the majority of the economy is not actually contributing much to government revenues. So IGR, non-oil revenues, which is what we're really talking about, become absolutely critical. So we need to implement strategies to improve our IGR, to improve our collections. And that's something I was involved in and we did in Ogun State, where we moved the IGR from 750 when we came in and we went as high as 6 billion. It's come down a little bit now with the economy slowing down, but it can be done. It's about mapping all the processes, seeing where the money is leaking and plugging those leakages. And that's what needs to be done, and it needs to be done very urgently across all government. All revenue generating agencies of government need to be part of that process. The other thing is we need to chase out cash. Everywhere that people transact in cash, there are leakages. So we need to ensure that we engage technologies and different channels of collection so that people are not paying cash, because wherever in our culture we tend to send people to do things for us. If you do it yourself through electronic channels, the money doesn't leak. So government revenue as a percentage of GDP in Nigeria is just 5%. The standard in developing economies is 20%. So we need to set ourselves very aggressive targets to plug the leakages and to get in additional non-oil revenue. And that will help us to deal with the oil price, the effects of the oil price decline. Senator Hassan's question, that the CBN governor said we are potentially heading for recession unless we take certain steps. We're not in recession, we're in slowdown. And actually the GDP is still positive. And it's, even though oil's contribution is negative, the GDP is still growing. So that tells us that the non-oil sector is growing. And if we can harness that, we can actually come out of the problems. And where is the growth? The growth is in agriculture, the growth is in services, the growth is in trade. So if we put policies in place to support that growth, we can avoid recession. And what are the policies that we need to look at? We need to consider most of the growth, and it must be inclusive growth, because we need to create jobs. That's a huge commitment that this administration has made, that it will be inclusive growth that creates jobs, that creates wealth. And the biggest creator must be the private sector. We cannot continue to grow the size of the public sector. It's got to be the private sector. So we need to look at what are the constraints, what are the things that are causing businesses not to grow. The biggest challenge, I believe, is our infrastructure. We need to invest heavily in infrastructure to generate business and to link areas of the nation that have advantage but can't turn it into money, can't monetize it. And that infrastructure is power. That infrastructure is rail. That infrastructure is road. For as long as it is cheaper to move a container of tomato paste from Amsterdam to Lagos than it is to move it from Kano to Lagos, we are not going to be competitive. We are not going to create jobs. And the constraints are around infrastructure. So we need to stimulate our economy by investing heavily in infrastructure, and that will get the growth, and that will hopefully help us to avoid recession. Nigeria is a huge, huge consumer market. And most people are importing, sending their containers across, and we're buying. And what we're trying to say to the world now is, we don't want to buy. We want you to come and make it here so that our children are employed and they get the benefit of what we're spending.
Summary: the states and indeed the local governments must work on their internally generated revenue. Tax laws must change constantly with the times, even as we ensure that we encourage stability and certainty in the business environment. We must encourage other non-oil sectors, manufacturing, agriculture, and mining, backed by a resolute and well-articulated plan for infrastructural development, roads, railways, power, electricity. We do hope that, like Senator Ben Bruce likes to say, we have made sense on this episode. To the new ministers, because many of them have been confirmed already, welcome on board. Put your hands on the plow and don't look back. Nigerians are hungry for action, and work must begin now. To our viewers, we thank you most sincerely for watching. Let's do this again next week. Same station, same day of the week. Have a blessed week ahead.